Hello, and welcome to Finance Wise, the show that empowers you to make informed decisions about your money. I'm Dancer Kostimi Malani, and in today's episode, we'll be discussing the banking system. Today on our show, we'll be covering the banking system. One of the most lucrative businesses in the world is banking. At its very core, a bank borrows money at lower interest rates and lends it out at higher interest rates. Its borrowings are its liabilities, while its lendings are its assets. When you deposit your money into a bank, your money is the bank's liability, but your asset. In an accounting technicality, your money actually goes to the bank's balance sheet as an asset with a corresponding liability. Currently, today's banking system is a fractional reserve banking system. That means a bank does not have to keep all your deposit money in its vault. Since it is highly unlikely that you will recall most of your money at any one time, it can lend out the vast majority of your deposit money while simultaneously maintaining the full balance in your bank statements. In most countries, banks have to keep a minimum ratio of depositors' money in their vaults by law. This ratio, known as the reserve ratio, can range from 1% to 30% depending on the country. Some countries like Australia do not have a formal reserve ratio requirement. The implication is that if every bank customer decides to recall all their deposit money simultaneously, the bank becomes insolvent instantaneously. That is, there is a run on the bank. This has happened in the recent past in some European countries during the global financial crisis. Now let's see what ordinary Namibians have to say about the banking system.
What is a bank?
I believe a bank is an institution which is entrusted by people to keep their money for them safely.
A bank is a place where we put the money in and interest, and you get your financial advice from the bank, get loans.
A place where you bank your money.
Is a place where you save your money.
A bank is a place where you store and save money.
Yes. What do you use your bank for?
My bank, I use it for banking, to pay my rent. There is a possibility as well to get loans and etc. etc. Yes.
No, I use my bank just to go keep my money or to get some benefit as well, like interest and others.
Only for my pension to be paid and just to collect my money again.
What do I use my bank for? I use my bank to bank my money, to safekeeping my money. That's all, yes.
I use it to receive my salary. I use the bank to keep my money also. I think it's safe that way.
Name 3 products or services provided by the banking system.
Banks provide loans, they provide savings, they provide what else? Financing for houses and properties,
Withdraw and deposit, and also invest.
Foreign exchange. Do I know anything else? Savings, current account, yeah.
The services that provided by the banking system, yes, as I said, there is many financial transaction that comes through. If you are, for example, a businessman, etc., you need to make money transfer to overseas, to other banks, etc. And even here, you can make your all financial services through the bank. And nowadays, the technology is very advanced. You can make even with internet banking. So it's huge.
Name the entity that regulates the banking system.
I think it's NAMFISA. Should be.
No idea.
Yo, I have no idea.
Mother of the banks in Namibia is Bank of Namibia. So it's the only bank, the other are commercial bank, which regulates all the financial transactions through the Namibia Bank. And for the non-financial or for other financial, there is as well a big institution, it's called NAMFISA, which regulates the money from other financial institutions with the non-sector banking. That is, I think, yes.
As we said earlier, a bank profits by taking a cut between its borrowing and lending interest rates. If it keeps too much deposit money in its vaults, it is money that is not being put to productive use and thus has a negative impact on the bank's profits. On the other hand, lending money out entails risks of bad debts or defaults. As you can see by now, the banking business is a balancing act of managing a portfolio of assets and liabilities. Since the banking industry is a highly regulated one, there are some rules for them to follow in this balancing act. For example, there are government regulations that require banks to keep a certain ratio between risky assets and equity capital. The upcoming Basel Accord 3 is another such example. We'll explain more about this during the training clip. The global credit crisis has thrown many spanners in the works of many developed country banks' portfolios and by extension, the global financial system. We'll talk more about this detail of global financial crises in upcoming episodes. The next training clip, however, focuses on the banking system in more detail. A bank is a financial institution and a financial intermediary that accepts deposits and channels those deposits into lending activities either directly or through capital markets. A bank connects customers that have capital deficits to customers with capital surpluses. Due to their critical status within the financial system and the economy, generally banks are highly regulated in most countries. This regulation is done by the central bank within that country. In Namibia, the central bank focuses on banking supervision, economic research and advice, policy research and formulation, currency and banking services, reserves management, and financial market development. Most banks internationally operate under a system known as a fractional reserve banking system, where they hold only a small reserve of the funds deposited and lend out the rest at a profit. They are generally subject to a minimum capital requirement, which are based on an international set of capital standards known as the Basel Accords. Banks act as payment agents by conducting checking or current accounts for customers, paying checks drawn by customers on the bank, and collecting checks deposited to customers' current accounts. Banks also enable customer payments via other payment methods such as electronic transfers and automated teller machines. Banks borrow money by accepting funds deposited on current accounts, by accepting term deposits, and by issuing debt securities such as banknotes and bonds. Banks lend money by making advances to customers on current accounts, by making installment loans, and by investing in marketable debt securities and other forms of money lending. Banks provide almost all payment services, and bank account services are considered indispensable by most businesses, individuals, and governments. Banks borrow most funds from households and non-financial businesses and lend most funds to households and non-financial businesses. Now we talk to some of our local banks about the services they offer in the Namibian market.
My name is Dawn Humphreys. I'm Corporate Communications Manager at FNB Namibia. A commercial bank is a financial institution that accepts deposits, grants business, car and home loans, and offers basic investment products like savings accounts and certificates of deposit. FNB Namibia offers various financial services to individuals, small businesses, corporate and public sector clients, and these products include specifically transactional accounts, cell phone banking, online banking, ATMs and point of sale devices, loan accounts, credit cards, investment products, youth and student accounts, trust options, forex options, insurance and assurance products. Our products and services are available through a countrywide network of 50 branches, 222 ATMs and mini ATMs, and 1,962 point of sale devices across Namibia. Our market share is estimated to be between 30 and 35% in the Namibian population. Our diverse product offerings, innovations and services. Our in-contact and bank your change products, for instance, are only two of those products that differentiate us from the other banks in Namibia. Also, FNB Namibia is the largest locally listed company on the Namibian Stock Exchange with a market capitalization of more than 3.9 billion, and that presents a 40% of the NSX's total market capitalization. For the youth, we have the Future Safe account that caters for children from birth to 12 years old, the Future Forward account that caters for teens from 13 to 18 years, and the Lifestyle Portfolio that is a transmission account with a student loan offering for young adults. In Namibia, there is increasing pressure to extend financial inclusion by offering more appropriate and affordable propositions to marginalized Namibians. And to this end, FNB Namibia has commenced on a variety of new initiatives, including the launch of 2 new products aimed at customers with an irregular income. Our new Cardwise and Bankwise Zero options mean that you don't have to pay monthly account fees and that you can still maintain your bank account even if you earn an irregular income. Also, we have the Easy Loans personal loan option for people from as low as 2,000 to 25,000 Namibian dollars depending on income. For our high net worth individuals, we have the Gold and Platinum lifestyle accounts with checks guaranteed for up to $2,000 per check. We have the Visa Electron debit card, as well as all other services that goes with that. We also have a private client division that has recently been launched in FNB Namibia. For small business owners, we have the SME check account or Bankwise account that is a low-cost business transmission account depending on customer requirements. We have overdraft and business loan facilities as well.
Now let's see how our resident investor Peter deals with banking system related issues.
Go Peter, go Peter. Peters in the building. Yo, Peters in the building.
Hey Peter.
Hey Sarah, you're late, man.
Yeah, I know. I'm sorry. It's
What
the
do you mean by
banks.
like 20 minutes left?
Well, just 2 weeks ago, I borrowed $3,000 from my uncle, which he deposited into my account. But then 2 weeks ago, I withdrew $2,000 from an ATM. And then a few days later, I withdrew $500 from the bank at the bank counter. And now when I was coming, I was about to withdraw the rest of the money. They give me a receipt saying I have insufficient funds. I don't know what's going on because I was supposed to have money left.
Sarah, let me ask you, did you withdraw at any ATM or do you withdraw at your ATM where your money is held?
Well, I find any random ATM I can find. It's fine with me. I don't really go according to my account.
That is where the problem is. When using an ATM, clients get charged a certain percentage of the amount that they withdraw. There is a minimum and a maximum amount they get charged. You should try to find out these things from your bank or where your bank is and try to inquire about this. It's usually cheaper for you to use a bank, like use an ATM where your money is held. You understand? You can't just use any random ATM like a NAM switch or anything. There's usually an additional fee charged when using an ATM, just like any different ATM where your money is not held. And remember, withdrawing in the bank, for example, you can't withdraw less than 1,500 because then the charges will be more expensive. Yeah? And the charges for using a debit card are usually cheaper when withdrawing inside the bank than withdrawing at an ATM. So you should also always try to understand. Let me tell you lastly, applying for internet or electronic banker is usually cheaper, doing electronic banking rather than going to the bank and filling out the transfer form there. Yeah, so you should always try to understand this. You try to go to your bank and ask them all these things in detail so that they can explain to you. So you don't lose so much money because the bank charges, if you are at a different bank and you charge and you withdraw at another bank, the charge will always be expensive. You understand? But try to find out these things from your bank. Do inquiries about it.
Now I see, yeah. Oh, okay. Anyways, thanks a lot for this information. Now I know I have to go to the bank. I have to find out a lot of information because what I've been doing, it's really a waste of money and I could have saved a lot of money. Now I learned my lesson. I cannot just go to any ATM.
Okay, what are you going to drink?
Oh, I'm gonna have juice. I'm just gonna have a glass of juice, thanks.
As you have probably seen during previous episodes of our show, CareerWise links the topic discussed in a particular episode to a career opportunity in that specific industry. Today, we'll be talking about the careers in the banking industry. We interviewed several banking professionals to discover exactly what their work is all about. Let's see what they had to say.
Like I said, I'm the Corporate Communications Manager at the bank, which means that I'm responsible for the management and execution of the overall communications functions at FNB Namibia for both internal and external stakeholders, and I manage the corporate image for all subsidiaries of the FNB Namibia group. It includes the development and the maintenance of stakeholder engagement and reputational risk management plans. Well, typically a degree in communications, journalism, marketing or related studies with 8 years minimum relevant working experience as well as 2 years management experience. Well, most importantly, I'd say strong communication skills, relationship building skills, creativity, innovation, proactiveness, assertiveness. You have to be passionate, goal-orientated, able to work independently and under pressure. Very much. I'm a marketer. I'm passionate about marketing and communications and the bank. I believe that I'm making a difference in the space that I'm in now. And for now, my biggest objective is to inform and educate the Namibian nation about financial matters. There are so many positive spin-offs from being financially independent and clued up, and people can become financially independent, realize their dreams and build towards a healthy economy for coming generations.
Please remember that the points made in this program are not meant to give you personal advice. There is no one-size-fits-all approach to investing. The point of this show is to give you a more tangible look at how an investor might implement the ideas discussed. There are many other alternatives out there, and we strongly encourage you to explore all of them and see what works for you. But for the average investor, the smart route still includes saving regularly, keeping investment expenses down, and being in the market for the long term. Whatever you do, keep the principles we've discussed in mind and never stop trying to learn more. This is Dantakos Jimmy Malani encouraging you to get finance wise. See you next time.